I'm Ryan Iverson, and this is Connections, presented by Investor Breakout. Today I have a special guest and long-term friend, Jordan Trimble from Skyharbour Resources. How do we know each other, Jordan?
I was just thinking about that. It's been many, many years.
I think I met you in my Raymond James
you were at
days.
Ray J, that's right.
And through CEM, we've obviously become quite closer as you've attended our events and we've become personal friends. Let's tell us a little bit about how you got involved in the capital markets and Skyharbour.
I was going down a different path, and at UBC, I ended up doing a minor in business because I realized I wasn't overly interested in becoming a doctor, pursuing a career in some offshoot of my major, which was biochemistry. So I ended up doing a minor in commerce. I much preferred studying that, learning about business, finance. And then I was fortunate enough, I wound up at a company called Bayfield Ventures, which was a gold company. Yeah, and you may remember Bayfield.
I think we have a picture on our fridge, CEM.
Yeah, actually, funny enough, that was the first conference. I think it was your first conference or CEM's first conference. And I was there with Bayfield. I had just started in the industry.
How old were you then?
I was 22, maybe 22, wow. 23, yeah.
And you had your CFA at this point?
No, I did not have the CFA. Okay. I was fresh out of college, and I was working with the CEO, Jim Pettit, who's still the chairman of Skyharbour, and I work with closely here in Vancouver. And I got lucky. Like, I got into this at the right time, coming out of school in early 2010. Coming out of the financial crisis, the commodity boom was on. The markets were great. As you know, gold was ripping higher. We had a gold project in Bayfield. It was basically this small block of ground that was tied on to the Rainy River deposit. And we actually ended up proving up the extension of the deposit. This has become now a producing mine in Ontario. And we were fortunate enough to advance this project right from discovery. Technically discovery. We knew there was going to be mineralization trending onto our project, but we had to go in and actually discover it. And then, through resource advancement and delineation, right through to an ultimate takeover by New Gold, who's mining it now. So that kind of gave me, over the first few years, a look into the industry, the kind of the evolution of an exploration company, and then ultimately, our dream, really running these companies. Exploration and call it early stage development companies, you have two options. Either you're going to go into production or you're going to sell to a larger company, either the project or the company as a whole. And we were fortunate at Bayfield to be acquired by New Gold. They consolidated the land package, and now that's a big producing open pit mine. And it was I didn't know a lot, obviously, in the early days. I was learning a lot, and it worked out very well. I was fortunate again enough, timing wise, to be working with the right group. We had a great team. We had great shareholders, a number of which helped me initially with Skyharbour. Really, Skyharbour started after we sold Bayfield.
Right. So I was going to ask you on that note, was that the moment that you knew that, you're probably doing your when did you?
So CFA, I started doing it because, and this was, the market, as you recall, started turning in 2012, right? Late 2011, 2012. 2013, it was fascinating to me at the time as a young person in the industry, watching like the easiest years to make money. And again, I didn't, I was fresh, right? I didn't know. It's a good saying, right? Like, I think Rick Rule says it, right? Never confuse your intelligence with a bull market.
Well, exactly.
It's so true. And so the first few years were great. I mean, the market, Bayfield went from 5-6 cents when I started at the company, coming out of the financial crisis. And, we had a big drill hole in late 2010, and the stock, ran up to $1.20, $1.30. And, I was just a young guy and had some options.
So that was your moment initially where you're like,
that was definitely,
I'm going to pursue this career.
In the first year working in this industry, that was the hook for sure.
Like, you're a smart guy, and you could have easily gone.
But then, so the CFA, like, what happened is the market then turned, right? As we know. And it was interesting to me to watch, a company, and the company still did well. We sold it, as I said, but it was riding that the wave of the market, and it was interesting to me to see how important the cycles are, timing is. And I thought, okay, well, the market's a little bit softer now. I maybe should learn more about markets, the world of finance, and that's when I started doing my CFA, which I did. I started it towards the end of my time at Bayfield, going into the acquisition, and then I finished it right when we were basically starting Skyharbour. So it was a busy few years studying for that, and then starting the company.
No doubt. And so from that, like you got to witness the volatility, and was it like 2007, 8 when uranium hit like what, 140?
Yeah, well, I was at school. I was at UBC, so I wasn't necessarily right in the thick of it. Right. But I mean, that was when we started Skyharbour, right? One of the key draws for me was the commodity itself. And I studied the history, I studied the cycles, and that's obviously a big part of the uranium story historically, is that bull run in the mid 2000s, where the commodity, the metal went from $10-12 a pound to 140 over the course of what was less than a decade. And there's lots of reasons for that, but I think that the way to summarize it is that what became clear to me then was this is over 10 years ago now, right? Was how hyper cyclical uranium is. So it has these long drawn out bear markets. A big part of that has to do with the fact that you have kind of a longer development CapEx cycle. Mm-hmm. So it takes longer to get these mines into production, to get them ramped up. And then you can have these crazy bull markets where there's, caused by a whole bunch of different reasons, both on the supply and the demand side. In the mid 2000s, it was, it was kind of a combination of both. You had the demand side picking up with, in particular, China. I mean, there was a commodity super cycle, mm-hmm. which a lot of that was driven by China and other developing parts of the world. But it was, China wasn't nearly as big a factor in the uranium market in the mid 2000s as China is now in the uranium market. But nonetheless, there was this commodity super cycle. Uranium definitely got swept up in that. And you had growing demand globally, but really what kind of kicked things off and created what ended up being a bit of a bubble was the supply side, and in particular right at the end of the cycle, the flooding of Cigar Lake. So that was another thing that was interesting to me looking at the previous cycles for uranium, was how sensitive the market is to specific supply side shocks. And in this case, it was one mine that flooded.
And then we saw the tsunami in Japan.
Yes, in Japan. So so when we started Skyharbour, it was really a year and a half, 2 years after that. The Fukushima accident was obviously a detriment for the demand side. The Japanese shut down their reactors, and the Germans followed suit. So you had a hit on the demand side. And the problem was we were also coming out of a good uranium market, bull market, where you had the supply side ramping up. So for example, the Kazakhstan went from producing hardly any uranium in the 90s to producing 40% of global primary mine supply by the time Fukushima happened, or shortly thereafter. So you had, again, the delayed development CapEx, right? So the mines uranium price goes higher, finally the investments come in, the mines get built, and then the market went the other way. And so you had excess supply, secondary supply, which suppressed prices and suppressed the market for the better part of 2011 right through to, call it, 2020. And then, we saw in the kind of mid to late 2000s, 2010, supply discipline. So Cameco, for example, cut back production. You just had, again, a serious underinvestment in exploration and development. For us, we saw that as an opportunity because that allowed us to go and acquire projects at attractive valuations. But there weren't many companies that were, looking for uranium or developing uranium mines from basically 2012, 2013 right through to, just really a few years ago.
So from that historical, you gave a really good backdrop of, the last 20 years here and what we've seen in terms of the volatility and everything else. You obviously saw an opportunity with Skyharbour. Maybe you can discuss a bit about what you see the macro backdrop in the the next couple of years here, and then tie it into Skyharbour as well, because I see a big theme in 2026 around uranium, and like we've gone through kind of the history and why it's volatile and the element itself. So maybe you could like kind of give us what you're sort of seeing in the future here, and then tie it a bit into like your company and how you're positioning them. I think that'd be really interesting.
Yeah. So I mean, getting back to what we saw as an opportunity, 2013, 2014, 2015.
Right.
There was an oversupplied market. The demand side wasn't ramping back up or recovering as quickly as we thought it would. But again, this just created even more of an opportunity to keep buying projects. I mean, we spent the better part of the early years of the company's existence acquiring assets at fire sale prices, right? We bought, for example, 4 projects in the early days. I think we spent maybe $500,000 in cash and shares, and a little bit of work that expenditures as a part of earn-in options. But we basically acquired 4 projects at very low prices. These 4 projects were in a company in 2007 in that uranium boom.
Right.
That was a $400 million company. And we were, at the time we acquired these projects, sub $5 million, right? So it just shows you, and we still have these 4 projects, and we have another 30 plus projects on top of that.
Right.
And we're currently a $65, $70 million company. So we've seen some value appreciation from the lows, but nowhere near where it was in 06, 07.
So you're saying then there's a huge opportunity here, like in terms of the cycle, potentially.
Yes. So
in the next couple of
getting
years.
back to the supply demand fundamentals, right? So there's 200 million pounds of annual demand approximately of U3O8, right? The stuff that we mine. That's not to be confused with what actually gets put into a reactor. Right. You have to convert it. You have to fabricate the fuel, enrich it, and then fabricate the fuel. Right. So the market that you see trading, the spot price, the long-term price, that's U3O8 yellow cake. That's the uranium that mining companies produce. So 200 million pounds approximately of annual demand. What's interesting about this, when we started Skyharbour, the demand side kind of through the 2010s, especially post Fukushima, it was steady, but it was never a huge kind of selling feature, if you will, in terms of investors getting excited. It's very easy to calculate the demand. You have a reactor that consumes X number of pounds, let's say 400,000 to 500,000 pounds of uranium a year. Okay, so you just it's easy to count the number of reactors globally. They're big. There's over 430 operating reactors, 70 under construction currently, hundreds more ordered, planned, and proposed. But it was a very easy story as far as the demand side was concerned. The Chinese started ramping up big time in the last 20 years. They're now building 10 new reactors a year.
And so in context, how much uranium would that be?
Well, I mean, the ones they're building, their design is quite a large reactor. So they would be consuming, probably closer on each reactor, probably 700,000 to 800,000 pounds a year.
And how many do they have existing right now?
So the Chinese right now, of the largest consumer of uranium still is the United States. Okay?
Right.
So they've got just under 100 operating reactors, right? The Chinese are gonna surpass that within the next few years.
Wow.
I bring all this up not to get too sidetracked with that one part. The demand side was always interesting because it was stable, it was growing at a decent clip. We had no idea that we'd be talking about AI data centers, we'd be talking about the electrification that
or the macro trends starting to really take shape right now.
Yeah, because I mean it was always just here's where the new reactors are coming online. Maybe there's some extensions, power plant extensions in certain Western countries. That's one thing to keep in mind. When you build these, they're big. These Gen 3 reactors and Gen 2 reactors are large, and they can run for, in some cases they can run for 100 years, right? So They're long-lived assets and consuming uranium each year. So that was interesting. The supply side's what I was always intrigued by initially, and still am. But the supply side, as I said, I mentioned Cigar Lake, which was the reason that you saw kind of the last tail end of the spike in the mid 2000s, because the mine flooded and it wasn't coming on when it was supposed to. It was delayed a number of years. And the price response, the market response to that was, it was incredible. The spot price gapped up, and there was basically a frenzy in the market. If you had a junior uranium
How many uranium companies were publicly traded at that time, do you think?
Yeah, there was, I think the number was in that, of course you had everyone start up, change the name, right, to, XYZ uranium company. But I think it was something like almost 800 publicly listed.
No way.
Yeah, at the peak. So, that's another good metric to look at.
What would you say we're at now?
I want to say in total now, and there's been a lot that's come to market, maybe 150 to 200
right.
at
so
most.
That's a good indication of you do get this.
And a lot of that is in the last 5 years.
Right.
Smaller companies that have come to market. So, we're nowhere near in terms of the number of companies and the combined market caps of all publicly traded uranium companies and mining companies is still lower than where it was. And, that's without adjusting for inflation. So, we're nowhere near, I think, the end of the market. But getting back to the supply side, it's a very geographically constrained and concentrated primary mine supply picture. So, basically, it's Kazakhstan at 40%, Canada, and just in the Athabasca Basin, it's another 15 to 20% global primary mine supply. A little bit out of Australia, a tiny bit out of the United States. They're trying to ramp up right now, but the history too is interesting there, because in the 50s, 60s, 70s, and even into the 80s, like in the early 1980s, the U.S. was the largest producer of uranium globally. But they had been building nuclear weapons. They were basically mining it anywhere they could, and they wanted to build up an inventory and a stockpile of it, right? So the U.S. now is producing less than, I think, 2 million pounds, 1.5 million pounds a year. They consume 50 million. They're still the largest consumer. 50 million pounds, or almost
50.
Yeah, almost a quarter of the current market. Wow. Where are they going to get their pounds going forward? It was easy for them over the last 20 years, 15 years, to get their nuclear fuel, their uranium from Kazakhstan, from parts of Africa. It was a very global market. That's changing. We're seeing deglobalization.
Well, they're going to have to look north now.
And that's where the Athabasca Basin is so important, because the U.S., it has a whole bunch of projects and deposits, but you don't have the same kind of geology that you have in northern Saskatchewan, where you can get these multi-100 million pound deposits like you have at McArthur, Cigar, Arrow. Our largest shareholder, Denison Mines, a strategic partner of ours, they are building what will be the next newest producing uranium mine in Canada, which is the Phoenix deposit of their Wheeler River project. Right. So the going forward, the Western utilities like the United States, Western Europe, and South Korea, Japan, in Canada, in Canada for Ontario's over 50% nuclear, right? So we generate a lot of nuclear power here in Canada as well. Where are we going to get a long-term secure supply of uranium? It's not going to be from the Kazakhs are already selling over 80% of their material now to the Chinese and to the Russians, and probably ultimately to the Indians as well. So where are we going to get our long-term secure supply of nuclear fuel, of uranium? The Athabasca Basin will be that breadbasket. It's interesting, again, when we started Skyharbour, there was no talks of SMRs coming on, AI, data center demand, the electrification with electric vehicles, with crypto, with all the stuff that we, these major macro kind of trends and themes. Right. It was just a steady eddy. Reactors being built in these parts of the world are being, life extensions. The supply side's where it gets interesting, because if there's a supply shock in one part of the world, it has a big impact. And so now it's interesting, because the demand side's really coming into its own. The supply side's still tenuous. They're only producing 150 to 160 million pounds a year, the primary mine supply. That 30 to 50 million pound annual supply deficit has been met by secondary supplies. You run out of secondary supplies eventually. So that's happening right now, and hence why we're seeing the price, the uranium price, both the long term. The spot price has been a bit kind of volatile. It jumped up 2 years ago. All the equities went crazy, and then it's kind of pulled back. And certainly with the smaller and mid cap names, you've seen it. You've seen them track more the spot price, which is kind of been stagnant this year. But the long term prices continue to tick higher. It's $86 as of last month. And I think what we see, like you look at Cameco and some of the larger producers, pretty good looking charts. And I think a part of that is the market is realizing, the average investor is realizing that the long-term price is actually really what matters. I mean, that's where most uranium trades. The spot price just kind of oscillates around it. But yeah, so anyways, getting back, yes, I think Winston will see a different, it'll be data centers. There'll be a lot, like just this electrification trend that we're seeing. And, nuclear is going to play a very, very important role in that. I mean, if you just look at the data center demand, electricity demand going forward, I think the number right now, current data centers and ones that are being built under construction.
I just saw Musk they're like looking at doing data centers in space.
Yeah. I saw that. That's a crazy moonshot idea. But but currently it's something like 500 terawatt hours globally. Right. Existing data centers and the ones that are under construction. They're talking about in the next decade that tripling to 1,500 terawatt hours. That's the same electricity consumption of the entire country of India. Okay, so that's just data centers on this planet, right? And again,
wow.
What is the best source of electricity? You need baseload. Renewables do not work for data centers, right? So you need baseload, or you need a lot of them, and you need battery storage. So right now, it's not that feasible to build a whole bunch of solar and wind, right, and then build a big data center right there. You co-locate it with either natural gas or nuclear.
I think it's really fascinating you talking about the supply potential in Canada. Maybe we can go through sort of the Athabasca basin economics or opportunity there, and what you see, and obviously why Skyharbour is chosen that.
Yeah. So the Athabasca, highest grade depository of uranium in the world. So the average grade of a deposit in the basin is about 10 to 20 times that.
Do you mind if I just when was that actually discovered as like the...
Yeah, so there's the history, there's a long history. It was a lot of oil and gas exploration and development. It was all energy, like oil and gas companies in the early days that were out there exploring. And this was, this happened, in the 40s, 50s, 60s. And then uranium was discovered a while ago, like almost 100 years ago. And there's been there was some production up in Uranium City, way up at the north end of the basin, and really wasn't until the 70s and 80s though where it kind of really got going. You had the obviously McArthur River and Cigar Lake being two big deposits. Those were discovered and developed kind of in the 80s and 90s, and then but you had other projects, Eagle Point, the Key Lake Mill, McLean Lake Mill. There's deposits around those mills that were mined out, and so there's a long history of exploration. Initially, it was oil and gas companies, and then it became mining companies. And then it was SMDC, which was the predecessor to Cameco, was a Crown Corp in Saskatchewan, and they actually had they were mining lots of different minerals throughout the province, but then just focused on uranium, became Cameco, and became the company they are today. And their cornerstone assets are up in the Athabasca Basin, in particular McArthur and Cigar. These are the two of the largest, richest uranium deposits in the world, relatively low cost, but lots, hundreds of millions of high-grade pounds of uranium. They produce, 15 to 20 million pounds of uranium a year, right? So each mine's over 10%. And that's, gets back to this, the supply side where, you can have these supply shocks because the supply side is so geographically concentrated, right? You have a couple producing regions or a few producing regions globally that account for, the majority of global production. So the Athabasca Basin, when we started Skyharbour, we saw this contrarian opportunity with uranium as a metal, as a commodity. It was trading near all-time lows in inflation-adjusted terms, and it actually, for the first few years, continued trending lower. Got down to $18 a pound in 2016, which no one's making money at even in 10 years ago, no one was making money at those prices. So we knew that the commodity was gonna turn, and it has. But the other interesting thing about the basin is we were watching at the time new discoveries, in particular next gen and fission, being made in new parts of the basin, some new geological settings that they were looking at, the basement rocks versus sandstone hosted deposits. They were using some new methodologies and techniques, better geophysics. The discovery story on both of those is fascinating.
It's fascinating.
Yeah.
If you look at maybe next gen story from probably the most successful junior CPC on the TSX.
Look, we were, we watched that happen, and there's been a number of other notable discoveries.
Right.
And I think it's important to emphasize at Skyharbour, as an exploration company, we are looking to emulate that kind of success. That is the return potential. That's the exciting part for investors is you look at what happened with NextGen. They went from a shell company, $20, $30, $40 million valuation initially as a uranium company. They're a $6-7 billion developer now. And that's on the back of
the Canucks.
And that's on the back of. You look at the Arrow deposit. It's like a once in a generation mineral deposit discovery of any type. You look at fission. It's now acquired. Paladin bought them out for $1 billion. The PLS discovery. You look at over on the east side. Denison. Our largest corporate shareholder.
Let's talk about that.
Phoenix and Griffin. Phoenix and Griffin were discovered in the last 25, 30 years. Denison's a multi-billion-dollar developer. They're a miner now because they're mining up with their partner Orano at the McLean Lake JV using this new mining method called Sabre. But these are all examples of the kind of return potential, multi-billion-dollar upside with these high-grade uranium deposits. It's interesting. Like another interesting fact is they are some of the lowest tonnage, so lowest volume of rock, right? Mineral deposits, yet the richest in the world. The
concentration is
exactly. Yes. You have there's no other part or jurisdiction in the world where you have this unique combination of geological features and settings that creates these high-grade deposits. You had multiple mineralizing events that basically created these high-grade deposits in an unconformity or around an unconformity setting, whether it's in the sandstone or below in the basement rocks. I won't get into too much of the geotalk, but it's fascinating. It's basically it's the only place in the world where you find these kinds of deposits. So from an exploration standpoint and from an investor standpoint, it's great because that yes, they're not easy to find. Look, you can never guarantee exploration and discovery success, and it can be the proverbial needle in the haystack, right?
Right.
But when you find it, typically speaking, the payoff is huge. So that the return, the size of the prize is potentially massive. And what was interesting for us in the early days watching these discoveries being made is the new tools that were being used that weren't there 20 or 30 years ago. Whether it's the geophysics, whether it's the geological modeling, better understanding of the geochemistry, different types of drilling. There were ways that you could make these discoveries with less capital invested. Cameco, it took them over 200 drill holes to find MacArthur. Okay, 4 to 5 to 600 meter deep drill holes. Any junior, you go bankrupt, no matter how good the market is doing that. They were able to do that as a much larger company. So we need to know that we can go in there with less money and find those deposits. And with the new exploration techniques and tools, we're able to do that. So that was another reason that the Athabasca Basin became interesting to our group was the fact that we had these new techniques and tools at our disposal.
They just continue to advance.
Yes, correct, they absolutely.
Yeah. You're being prudent as a CEO, keeping the share structure the way it is. You brought on the right partners who know the area, who have the backing, the funding, and you've structured this so that in 2026 it could go nuclear.
Yeah, it's gonna be our busiest year in terms of meters drilled, in terms of real discovery success potential, re-rate higher. The other part of this too is getting back to the market, right?
Let's talk about that.
We do trade, we do trade, with the market, and we've had 2025. If you look at most, smaller to mid cap uranium companies, it's been kind of a stagnant year.
Yes.
The larger caps have done quite well, which is very common in the earlier parts of a bull market.
Right.
So we saw this in the early mid 2000s. Cameco seriously outperformed all of its junior counterparts in that first, call it 3/4 of that bull market. The juniors in the last quarter of it basically were up, 5 to 10x. I mean, on average,
and that last 18 months, sort of thing?
Last 18 to 24 months. It was basically, the juniors were on average up, I think in the first handful of years, 250%. Cameco was up 700. Cameco ended up being up about 800% by the end of the bull market at the top, right? In total return over that period. The juniors ended up on average being up well over 1,000%.
Unreal.
So that, that last year and a half, 2 years was where the juniors really caught up. And there's lots of reasons for that. Capital takes time to flow down. I think one of the things that we're going to see happen in the next year is that disconnect close. I think, this deal that we've just done with Denison is a good example of, a larger company like Denison recognizing value with a smaller company like Skyharbour and the Russell Lake project, particularly as a pipeline project for them and their operations in the region. And then I think, capital will, as it does, eventually trickle down, flow into the smaller and mid cap names. What's exciting for me about this is, given that there's, yes, the juniors have over the last 5 years, they're up, right? But they haven't moved as much as the
there's been a consolidation.
Yeah, been a consolidation. And that's, by the way, and that's other, like if you look at the last 3 or 4 years, everything basically shot up in late 2023, early 2024. So you've seen kind of a consolidation with the smaller mid-cap names, really kind of since that. And I think next year is the year you'll see this big breakout. We've seen the long-term price, uranium price, which is something to keep an eye on, has been ticking higher. We saw a large amount of volume contracted in November of this year, 2025, over 27 million pounds, which is an indicator that there's a new contracting cycle, that procurement cycle that's coming, and that's always going to be a key driver for the uranium price.
And there's, like we talked about, there's less public companies now as there was in the last big cycle boom. So you got, fewer companies to choose from, and I think what's fascinating now is, like we talked about, the technology and being able to discover this and like the partnerships and everything else. I think it's going to be a really exciting year. And I think you guys are really well positioned. And I appreciate your time, Jordan, and
thank you.
Giving us sort of a backdrop on, where we are in the cycle, the Athabasca region, just in like the world in the macro sense. And I think this is like a big sector to focus on in 2026.
I agree.
Yeah. Good stuff, Jordan. We've covered a lot, and I've known you for quite a while now, and I think what's also really interesting is you are an entrepreneur, and Skyharbour isn't the only project and passion you have, and also obviously you became a dad recently. And is there anything else entrepreneurial that you're working on, or do you see like opportunity with right now, or maybe you can talk a bit about that?
Yeah, well, I mean, look, Skyharbour, I've got 2 babies now. And
True.
Skyharbour's still, the original one in the business, in my entrepreneurial pursuit. But another one that I know you're familiar with, that I'm still an officer and director of, is now Trident.
Best symbol on the exchange.
ROCK, which was a company that we listed through an IPO a number of years ago. It was called Rockridge. We merged 3 companies. together earlier this year. We restructured it, we raised some money, and it's done very well.
Very well. And a discovery?
Yeah,
Yes.
yeah. So technically, yes. It's
Yeah.
so I won't get into too much detail on it. The CEO of the company, a very, very capable gentleman out of Toronto, John Weisblatt. He tells the story very well.
Yes.
He joined a few years ago as the CEO, and we were looking at opportunities to basically take what was a fledgling little small company in Rockridge and turn it into something bigger. And we were able to partner up with these two other companies, merge the companies. So one, Mass Gold, brought gold assets in Saskatchewan, which again ties nicely in with my history there and just the knowledge of the province, and then one company had a healthy treasury, Eros, and then Rockridge brought the management team and a copper asset. Now the copper asset we're not doing much with, but the gold projects were interesting because they're on this greenstone belt, the Larange Gold Belt. They're just south. It's south of the Athabasca Basin if you're looking at it on a map. And these were past producing. One in particular, Contact Lake, was a past producing Cameco gold mine, SMDC mine. So it's interesting in Saskatchewan. It's a very prolific part of the country, province, in terms of mineral endowment. Not just what you think though of uranium and potash. It's got the potential for lots of gold, lots of precious metals, lots of base metals, but there hasn't been as much investment in precious metal exploration, gold exploration and development. So here you had this kind of overlooked opportunity. Cameco mine there. They shut the mine down at Contact Lake because gold in the 90s was $300 an ounce, and they were focusing almost exclusively on uranium, as they should have done at that time, and it's worked out great for them. But there's these opportunities that are kind of left there, and so the company's done well in that it started drilling earlier this year at one of a couple of projects, and announced one of the first drill holes, a very significant intercept. Worked out to about an ounce over 9 meters, and there was several zones of high grade mineralization, and it was well outside of the mining, the previous mine working. So so it's not a brand new discovery in that, yes, we know there's a past producer there, but it's well outside of
and the structure was really good on.
Yes,
you guys structured it really well.
That's key, right? It's basically a new company. So well structured and well funded, and that was another key thing. We had one of the three companies came with a pretty healthy treasury, and so we raised a little bit of money for it at 50 and 75 cents, but it's well structured, good shareholder base, and now news flow that's moving the share price higher, and it has a resource. Like, I think that's the important thing, is that it's not just a drill play. It actually has a few million ounces, global resource, measured in inferred and M&I, and so it's an exciting new gold story in a province that we know very, very well, and I think there's a lot more upside, not just at the project that we're working on, but at a couple other projects in the portfolio. So that's one that, although I'm my day-to-day is Skyharbour, I was obviously very involved in founding it, and then still sit on as a director and as an officer of the company. But yeah, anyone that's interested in it, the CEO John Weisblatt,
John's great, and I mean they were at our last show, and I mean that's what's great about our ecosystem, is that we get to see each other a couple times a year. I get to see how Skyharbour's doing. Getting updates from you through our events, and then there's other projects that come along. Meeting John with Trident, and it's really fun because you get to see the corporate development, the opportunities present themselves, and here we are again with another big, price appreciation based off of execution, right? Couple more questions, Jordan. We all have mentors. We've been good friends. Who would you say has been really instrumental in your development in terms of, becoming who you are now?
Yeah, well, I mean it's a loaded question.
Right.
There's a number. I mean,
We can go to the business side. We'll start-
yeah. No, I mean my dad obviously is one. He my whole life, quite frankly, right? And he was a broker in the industry. Been in the industry for years, and so
Bill.
he's that's an obvious one. Early on, I was fortunate. My chairman Jim Pettit, who ran Bayfield, and I worked directly under at Bayfield, and he's been a business partner of mine for years now. Early days with Skyharbour, Maren Katuza was an early shareholder and a mentor. He's very well known in the industry. Done incredibly well. So, it'd be remiss not to mention Maren's name. Tim Tremundi, another guy in the industry who's a geologist by background, has run a number of companies. He was actually quite involved in the merger that we did with Trident. Still working very closely with Tim and his team in Cranbrook. Look, there's Rick Kazmersky. I have to bring up. He was my initial, call it, partner in Skyharbour. So he was the brains behind the acquisitions, all the work that we did in the early days. Unfortunately, he passed away a few years ago. So it was that was challenging time, but he was absolutely a key mentor and partner of mine. And last but certainly not least, and probably I'd say the CEO in the industry that I admire the most, and maybe a bit biased here, but Dave Cates at Denison. So I was introduced to Dave actually through by Maren, and we did an initial property deal with Denison almost 10 years ago. And Dave had recently taken over as the CEO of the company. And what he's done with Denison in the last decade is, and he's been there for, he's been there for almost 20 years, but he's done an absolute phenomenal job. And yes, he is a director of Skyharbour, large shareholder, and we've just done the deal. And I would say Denison outside of Skyharbour would be my uranium pick, right?
Right.
But just watching how he manages, it's his management ability, and he's just so cool, calm, and collected in every scenario. He's very shrewd. He's very business savvy. He's very fair. I've all the time in the world for him, and so I'd say that would be, and I can totally understand how Denison has become the success it has become.
Because
it starts at the top, right? He's done such an incredible job, and definitely up there in terms of mentor and someone I look up to in the industry.
What part of your business keeps surprising you, even after all these years running it?
Oh, wow. So I'd say specifically for Skyharbour, and the uranium market. I think that's a tough one to answer in one simple answer. I think
would it be the macro, how much it changes all the time?
I would say it is. You know what? This sector has really illustrated to me, the saying that markets can stay irrational a lot longer than you can stay solvent.
Yes.
But to the upside and the downside, right? And so, I watched when we started Skyharbour. I thought maybe market would turn, uranium price would start moving higher after a couple years, 2016, 2017, not the case, right? And it was challenging the market was depressed for longer than I thought it would be. I'm now hopeful that, the opposite will be true. I think we're coming into a much longer, more sustained bull market. So, but that definitely was something, I wasn't anticipating. I thought it would turn quicker, but then again, you roll with the punches, and like what we were doing at the time was acquiring more and more projects. So it wasn't like it was an opportunity looking back at it. It was just, it didn't turn as quickly as we
take
thought.
Advantage of the current environmental
100%.
Your situational awareness is huge, right? What's a question investors never ask you, but probably should? your burn rate?
Yeah. Well, actually, you know what's an interesting one that is very closely tied to that is, what are your drilling costs?
Yeah.
I'm surprised that more investors don't ask that specific question. Yes, the burn rate, and what's your G&A?
I bet, for a mining company, that's kind of like what I'm always shocked at.
Yeah,
is like, how much does it cost to drill?
Drilling like again, what turns a 20, 30, $50 million company into a multi-hundred, potentially multi-billion dollar exploration success story?
Right.
It's drilling and it's discovery. Well, what's your main cost? It's your drill cost, and drilling costs. I mean, we see this in the basin. It can vary. Like it can be all over the map. I mean, if you have a remote project that you have to fly in, fly out of, it's in the winter season. You have limited light. You have a driller that hasn't drilled the project before. It's a smaller program, so your mob and your demob is more of the cost. The fixed costs are higher. You can, you're looking at like all in 800, 900, depending on where you are, it can be over $1,000 Canadian all in a meter. So that, when I refer to drilling costs, I like to think of it in all in terms. So it's your drill cost, not just your driller though, but your camp if you have one, your geologists, your assays, everything. We at Skyharbour at Russell and Moore, because it's road accessible, we've got a camp there that Rio spent a bunch of money to build out. Years ago, there's power lines, there's infrastructure, and we can drill year round. Our costs are sub 350 Canadian all in a meter. It's actually one of the lowest drill costs of any project in the basin because of the infrastructure, because of the camp, because of the seasonality or lack thereof. So investors do ask it, but like that's literally when I am investing in a company, exploration company. That's like the first question, one of the first questions I will ask. I'm obviously I want to know, I can see what their G&A is, right? I can see what their burn is on their financials. But it's a lot trickier to actually discern what their all-in per meter drill cost is. So that's one that I would say is an important one for exploration companies.
So Jordan, one thing is like a portfolio manager and running multiple positions and looking at new opportunity all the time that get presented to us at our events and just through our ecosystem is one question we like to ask is how do you balance the operational side of the company with the sort of more dynamic macro side of like the market. So you wake up in the morning and you obviously have the operational side of your company, Skyharbour. But then how do you also manage and how do you look at that?
Yeah, and look, I mean that's a key feature I think an attribute that successful CEOs in this industry need to have. Like you do have to manage both, yes. Right? I do wake up and care about where the stock's trading, right? I think most CEOs do, and my background, I'm not a geologist, I'm not a technical person, right? So from the operations standpoint, my goal and objective there is to hire the best. And like we just hired a new VP of exploration, head geologist a year ago, Sidar Donmez, who was a huge addition to our team. He worked at Denison for 17 years. And then a few other companies. He's been in the basin his whole career. He's very, very reputable, well-known geologist. And we have another gentleman, Dave Biard, who's ex-Cameco. He's been working in the basin for 40 plus years, built and sold a company called J&R. I mentioned my previous business partner who passed away, Rick. He was a well-known uranium geologist that I teamed up with. So I try to surround myself with the best geological technical team I can and learn about it as much as I can, right? I need to understand it, but I don't need to be the expert. I'm not. I have my geological team in Saskatoon. I'm not out there picking drill targets, right? So I go up to site as much as I can. Again, I try to immerse myself in it. My background is more on the capital markets side and the management side, and so. I do spend a lot of my time on that, right? So everything from, the capital raising and, kind of the high level investor relations, managing an office, the corporate side of things, the business development, the corporate development,
Right.
where, like the early days, it was, okay, I need to work with the geologist to do this, but what are the opportunities to acquire specific projects at specific prices and valuations? Let's go negotiate. Managing a prospect generator business. We have 10 partner companies, right, that we work with. Needless to say, that takes a lot of, it takes time. I've delegated that to a number of other people to help kind of manage that part of it. But, my job is, a lot of it is market focused, and big picture stuff. How are we going to build the company? How are we going to create value? And getting back to the market, it can be frustrating because the market can be, maybe this is the other answer to that question. What surprises me? So, be honest, sometimes I wake up and I go, the company's never been in a better position.
Mm-hmm.
The prospects for real value creation have never been better. Yet the market has, the market's saying otherwise, right? And there's, to be honest, been times where, the opposite is true. The market is like on fire, and not that, it's not that we're not doing great things or that we don't have a lot of potential, but, I kind of scratch my head going, it's, well, clearly, like, we're being swept up in the uranium market and the macro trend improving. So, it's also important to, moderate that. Like, you don't, yes, you want to care, but you don't want to get too swept up in the day-to-day fluctuations, because it can drive you crazy, as you know. Yeah. And then you can lose sight of the forest for the trees. Like, it's the balance. You need, like, bigger picture stuff. You got to kind of ignore the day-to-day noise as much as you can to focus in on the real long-term value drivers for the company.
So, Jordan, I will say, through the CEM events, I've seen hundreds, if not thousands, of presentations, and I will say you have one of the most impactful deliveries and presentations. What would you say, in terms of how did you come to that point, and what would you tell other CEOs or other people out there in terms of, like, delivering their like, who they are, and in terms of a corporate presentation? What would be some, like, key points you could give them in terms of being, like, as impactful as you are?
I appreciate that. Yeah. Thank you. I mean, look, I by no stretch of the imagination am I, as good as some others that are out there. I mean, you look at some other executives that present their story, and it's incredible. Like, you want to buy stock right then and there. Exactly. And I'm trying to get there, right? So I think that's one, is like, you just got to practice makes perfect. You got to keep working on it. And over time, I think it's a combination of you keep working on it, and you also, I found, you get better. Your understanding of the story becomes thorough enough over a period of time that when you present it, you can one thing I like doing is catering it to specific audiences. The way I'm going to tell the story to maybe a retail investor who wants more of a kind of macro synopsis and pitch, that's going to be different than maybe an analyst who's a geologist by trade, who wants, like, to talk very specifically about drill targets and the results and all that. So and if you have a good enough understanding of the story, you can then cater the pitch to the specific investor, an investor type that you're talking to. So that's, I'd say, another maybe something that is worth get. But that takes time. You got to, again, do lots of repetition, and I think, and look, hire Patrick, right? One of the things that actually, like at the CEM conferences, kind of force executives and IR people to do is to distill it down into a much shorter pitch, right? And that's key. Like, you look at really good presenters in our industry, and they'll have a 5-minute pitch, a 10-minute pitch, a 12-minute pitch, a 20, 30, and so this is what's great about the CM 20-minute model is that you really hone in on call it the 15 to 20 minute pitch, and you get really good at it. So It's lots of different things, but there's some watch lots of watch lots of people, and those, like, they're well known in the industry. Those that have the presenting skills that they do, go and watch them at conferences online and just learn the tricks of the trade through them.
Right. I think another thing well explained is, and another thing that you do really well is, when you first sit down with the investor, you're asking the questions as well. So you're having that
always
that dynamic exchange right away.
If it's a one-on-one meeting, that's always the first thing I do, at least, and I think is hugely important, because you need to understand where they're at, where they're coming from, what's going to be interesting to them in the story. Telling the entire story over an hour, you're gonna lose anyone that you talk to.
Right.
So you really want to. That's why I say, like, you cater it to the investor.
Thank you, Jordan, for your time today. We've covered the whole gamut, but I have one more question for you.
All right, fire away.
Your biggest win ever?
Biggest win ever. Well, I got to cop out here, and I got to go. And it really is, all jokes aside, newly minted father. So my little baby boy Winston and my lovely partner Paula, for sure the best decision, biggest win I've ever made in my life. I wish I was a little bit younger, to be frank, when I started having kids, but that's it.
That's phenomenal. I know Paula, and I've met Winston, and you're a very lucky man, and I appreciate your time today. Thank you, Jordan.
Thank you.